extract from our weekly survey of major world markets. And today I'd like to, first of all, point out that these are our strong convictions: sterling euro, the US Treasury note yield, and gold. Bearish of gold, we think US yields are going higher, and we think sterling's going higher against the euro. But we want to look at a slight side issue, which I think is increasingly interesting, which is the dollar euro. Let's look at the dollar euro in brief and point out that the market's been dithering at the bottom of this. It had broken down out of this parallel channel and has been dithering around the lower diagonal of that channel and clearly penetrating it, but whether it can sustain a penetration is something that's up for grabs. Increasingly, this looks unlikely. It's failed once, twice, and this looks like the third failure to sustain a penetration of the bottom of the parallel channel. We think this is especially bearish insofar as these prior highs have been, which should have been good support if this was a good a bull market, bull trend. These prior highs should have been good support, and it's drifted back, strengthening dollar, weakening euro, quite easily through the support from these prior highs. And if we look at the daily chart, here's one of the prior highs 110.11. It broke back through that prior high, tried to rally through it, but it was unable to sustain a rally through it. So insofar as it broke back through that support, it is unable to break back through it, having broken down through it, and now has created resistance above the market, above itself, by holding beneath and being unable to break back through the prior low. So this prior high was good support, which failed clearly once, twice, and now it's broken through this prior low of the last week and has failed to break back through that. We think this is an emergent bear trend, an emergent weakening euro, strengthening dollar, and that's of interest. Thanks very much.